and also the Illinois Wix Warrior Program. Today we have David Piatek here from the Federal Savings Bank to detail the VA home loan process. David has an extensive background in real estate marketing development and is also an active member in the Illinois Army National Guard. From our conversation we have had, he is very committed to helping veterans and active service members secure home ownership. We're very excited to have him a part of our network as we connect soldiers to resources.
Thank you, Karen, for the introduction. Hi, everybody. Again, my name is David Piatek. I'm a vice president at the Federal Savings Bank. I've been in business for about 12 years, and really, I'm in the Guard for almost 7 now as a 35 Mike. And so kind of my goal with today's seminar is to kind of really help navigate the home ownership process, right? How to leverage your VA home loan benefits and how to really utilize them, because sometimes, kind of as the picture depicts, it's kind of complicated, right? Once you go into it, there's a million different things. You read things online, you talk to a friend, and every situation is kind of different. But what we want to do with the presentation is just really focus on creating a general landscape that you can kind of go off of. So what we're going to cover today: what is a VA home loan, why you should use your VA loan, what makes you eligible for a VA loan, and what makes you qualified for a loan once you're eligible for a VA loan. Different type of properties you can buy with it, how much you can borrow, what's the funding fee, what are the next steps, and any questions that you may have. Throughout the presentation, we'll kind of pause after each slide to take any questions. So kind of first, what is a VA home loan? So the loan is guaranteed by the government. 25% of the loan is guaranteed by the government. That's how you're able to get 100% financing. The VA itself does not do any mortgages. So if you see any type of advertisement about a mortgage company, they have zero affiliation with the VA. It's more of that they're able to offer loans to veterans to utilize their VA home loan benefits. Typically, who offers VA loans is going to be your banks, brokers, banks, either they're directly providing you a loan with their own money and then selling it off in the secondary market, or a broker's using different banks to use their money in order to to be able to provide you a loan. A lot of questions I get about how many times can you use your VA home loan. You can use it as many times as you'd like, and you're able to have up to 2 VA home loans at the same time. And that really depends on a couple things. It would be how much eligibility you have left and your situation. But it does cost more once you keep reusing your benefits, which we'll go over when we go over the funding fee. Any questions about that?
Yes, I just had one question, David. Now, if a service member is wanting to start the VA process, do they contact the VA or do they go to their bank to start that?
Yeah, so kind of the first step is to contact the lender. So be a bank or a broker, or like myself, we can walk you through, kind of figure out, hey, we need a certificate of eligibility. What does that mean? And just kind of get the ball rolling. Because if you don't, you really need to understand the financing portion. Even if it's, hey, I'm thinking of buying a property, and it's going to be another year before I purchase because I just rented out my place. It's important to talk to the bank because they'll be able to set you up for success, either fixing some kind of credit or, hey, this is how much money we need for down or to save for closing costs. So that part's really important. So that's a very good question. So why should I use my VA home loan? In the next slide, we're going to kind of show you a comparison, right? There's a lot of things we hear about: conventional, FHA, and VA loans. Those are your 3 primary loans. So one of the advantages of using your VA home loan is going to be a lower interest rate than any type of conventional product out there. Little to no down payment. Typically, like in Illinois, you can go up to $417,000 to buy a condo, single-family, multi-unit with no down payment, and a lot of times people get money back at closing for buying a property. There's no private mortgage insurance, which is huge savings over your loan. What private mortgage insurance is typically mortgage companies want you to put 20% down, so it has less risk for them. So with that, there's a fee associated, which we'll go over on the second slide. If you collect 10% or more in disability, that's from a VA, from a military accident, or any type of just injury sustained while in the service, the VA waives your funding fee, and that's something we'll kind of go over towards the end, so you kind of see what those costs are. So here's just kind of a good example of a conventional FHA and a VA loan. Now, I use an example of $300,000. There's kind of the medium range I use, especially like out in the city or even in the suburbs. A lot of times, this is the purchase price you're looking at, right? I look at the taxes, kind of what I see on average, the insurance on average. So here we have three examples of $300,000 purchases. Conventional, typically you put 5% down. They've recently changed that to 3%. Your FHA requires 3.5% down payment, and the VA for this product is 0 down. This kind of shows you what your loan balance is. So 285, so it's 300 minus the 15. FHA and the VA, the loan balances are a little bit higher than the down payment. That's because with FHA and VA, the home loan, they charge an upfront mortgage insurance premium. That's like a one-time fee. So for the VA, it's your funding fee. And for FHA, it's a fee to use the FHA mortgage. So not only do you have like a monthly private mortgage insurance, you also have like the upfront fee they charge. The VA does not. So we'll kind of go over that. So here you have your, so these rates are from, kind of gives you at the bottom, they're from the December 8th of 2015. It shows a 680 credit score or higher, and it's a single family home. It's important to note those things because anytime you look online at interest rates, you always have to click the assumptions because they typically show 25% down payment, 740 credit score, 300,000 loan amount in a single family home, right? You have to compare apples to apples. This kind of here shows your 4.125 on the conventional, 3.375 on the FHA, and a 3.5 on a VA. You can see here on the conventional, the private mortgage insurance is 211, 205 on the FHA, and a 0 on the VA. I left the taxes and insurance the same on each one because they will be the same. But just take a look at the difference in the payments, right? So $2,093 on the conventional, $2,007 on the FHA, and $1,879 on the VA home loan. So you're saving a substantial amount even though you're not putting any money down. And one of the bigger advantages, too, is that if you were to make what a conventional payment would be on your VA home loan, you're going to be able to knock off a good amount of years on the mortgage payment. And when I did this calculation the other month, you save about $118,000 in interest. So that's money you could pocket back towards the end of the mortgage for retirement or money back in your pocket. Any questions on that?
I have one question. The private mortgage insurance, how long does a person have to pay private mortgage insurance?
So for a conventional loan, if you put 5% down, they're gonna wait until you have what's called a 78% loan to value. So once your loan amount becomes 78% of the original purchase price, that mortgage insurance is going to fall off automatically. Typically, that's about 7 to 8 years. So that $207, you're throwing that money away, right? There's no tax write-off on it. There's nothing. On the FHA loan, it is for the life of the loan. So that will never fall off no matter what percentage you pay off. And the VA has none. So again, within that 8 years, if you apply the extra difference between the 2093 back into your VA home loan, you're going to pay off your mortgage substantially more, plus you're leveraging cash, right? You want to be liquid because real estate is not a liquid asset, right? You can't just pull money out right away. It takes years to do. Any other questions on that?
I have one other question. If you're paying private mortgage insurance on a conventional, and say like you had a couple of late payments, does that affect whether or not the conventional or the PMI will come off of the conventional, or will that have any factor into that at all?
That's a good question. Now, I don't know the answer to it because the private mortgage insurance is based purely on what the loan to value is. I'm not sure if they factor that in. I haven't heard of them doing that.
Okay.
But that's a good question. Now, something to know, this is a VA presentation, but if for any reason you decide to go conventional, it's important to note that they have products out there, even with 5% down, that you could eliminate the private mortgage insurance. Now, the only way that works in the business is what's basically called as a LPMI product, lender paid private mortgage insurance. Your interest rate's going to be much higher, but you're not going to have the private mortgage insurance. That's basically, that money's built into the rate.
Okay.
But again, if you were going that option, again, the VA loan would be substantially better for that. So who is eligible for your VA home loan? So even the VA, so we'll skip ahead to the next slide. So here it kind of shows you a rough breakdown, right? You have reserve 6 years in the select reserve, active duty 90 days or 181 days during peacetime. Here you have World War II, Vietnam vets, Gulf War vets. And a lot of it's a little bit different, right? Here it shows, hey, wartime, 2 years, 2 years full period, which calls for orders to active duty. But yet we do a lot of loans for people that have been 6 months in the Army. They already qualify for the benefits. So the best thing to do is to go, especially if you're in the Guard right now or active duty, you still have your CAT card, go to ebenefits.va.gov and log in using your CAT card and go to your housing benefits, or you could search certificate of eligibility. That way you can go in, get your certificate. It takes a day to 5 days to get back. Now, you don't need this in order to talk to your lender, because your lender can pull this for you in a matter of minutes. But for some reason, when it goes to the opposite side, they take forever. So it's just a VA for you. Then you're going to most likely need a copy of your DD-214 and your certificate of release or discharge from active duty. So if you're still in the Guard now or active duty, you might not have to provide this because you won't have. If you're in the Guard, you're going to have the DD-214 already. But if you might also, if you're already out, you might need a certificate of release or discharge from active duty. Active and Guard. If you're in the Guard Reserve, you have NGB Form 22. This is when you do your annual, trainings. And they go over, hey, check your I-perms to make sure everything's up to date. This is where it's really important to make sure that your retirement points and everything else is up to date. Your commanding officer is also going to have to sign off that you're in good standing in your unit.
I just have one question. If you're a service member or a soldier in the National Guard who just came back from your AIT, you've only been with your unit for several months, are you still eligible for the VA home loan? Or is there a period of time?
So there is. So for the Guard itself, if you've never been deployed, it's going to be 6 years.
Okay.
Yeah, you're going to have to wait. If you've deployed, then most likely you're going to be eligible. Now, different services, it counts different, and it may seem weird. So National Guard and the reserve units, it says 6 years, but some of the units, I understand that, like I went to a Marine unit, they have it a little bit structured different on how their points work, so it might be sooner than the 6 years. So again, even the VA says, that's a great guideline, and this is from them. Go ahead and pull your certificate of eligibility. It's going to show up on there. And that's just kind of, again, the slide. Next two are examples of what a certificate of eligibility looks like. Remember we talked about earlier is that, hey, if you collect 10% or more in disability, your funding fee is waived. So that's where it's going to be here, if you're exempt or not. So in this example, this is a Marine Corps, Marines, non-exempt, so it'll show you're not exempt. If you used your VA home loan benefits in the past, it'll show them here, or if you currently have any. And then it's going to show your entitlement, which is Veterans Basic Entitlements, $36,000. Now that doesn't mean you can buy up to $36,000 property, right? That'd be crazy. But what that does mean is that gives you full entitlement to, let's say in Illinois, it gives you $417,000 up to for your loan amounts. And here we go. So if you use any entitlements for previous VA loans, it's 0%. So let's say, for example, you have a VA home loan now, and you want to buy a VA, you want to sell your house and buy another home. A lot of people have questions of, well, do I have to wait to sell my house and then go look for a new one? That is not the case. You can sell and buy the same day. Okay? And the same thing if you already have a VA home loan, but you want to refinance it, you're going to go and get your certificate of eligibility. You're going to need to get that. So this is an example of an exempt funding fee. It shows here Navy, Major Service, $36,000 again, and then it's going to show, hey, funding fee. Veteran is exempt from funding fee due to the receipt of service-connected disability compensation of $29.60. So that income, on top of your regular income, is included in your monthly income. And that's kind of what we're going to go over, kind of what's next. So once you're eligible for your VA loan, what makes you qualified to secure a VA loan, right? Those are two different things. Just because you could borrow up to $417,000 with no down payment doesn't mean you qualify income-wise for that. And it can be frustrating because certain banks have certain overlays. So some banks, like I'm sure you heard of like debt-to-income ratio. A lot of banks are going to cap that at 42, 45%. But in reality, the VA doesn't have, it can go up to 55, sometimes 60% debt-to-income ratio. So it really depends on the bank itself. Like I know with us, we'll go up to 55 and a little past that with compensating factors. But for your W-2 employees, typically it's 2 years. You need 2 years of income. We can do 12-month exception depending on the job, if it's salaried. There's a lot of exceptions to it. Same thing, like you got off active duty, went to school for 2 or 4 years, got your degree. Right out of school, you got a salaried position at $70,000 a year. We can do a mortgage for you 2 weeks out of school. So there's a lot of exceptions to it, and it really just comes down to talking with a lender that understands the VA home loan. Same thing with self-employment income. That's going to be 2 years of corporate and personal tax returns. Self-employment income is not just owning a company. It's also being 1099, an employee, and that also includes being W-2, because some places are straight commission, like if you're in a sales position, but they give you a W-2, they don't give you a 1099. So you got to be tricky, and you got to be very transparent when talking with your loan officer about your situation and making sure they get the full picture, because some things are going to be allowed, some are not. Now, as far as assets go, this goes like money, your checking, savings, 401k, IRA, PSB account. The VA really is loose on the reserves, right? So sometimes you may not need any reserves. As long as you're making money, you can make your mortgage payment month to month. The only time that really comes into play is when you start buying multi-unit buildings, right? You want to buy yourself a 2-unit or 4-unit building, you're going to need some reserves, and if you go over the loan amount, you need down payment. As far as the credit score goes, the VA does not have a minimum, but all lenders have a minimum, right? So some lenders will go down to 580. I know a lot of the big banks are the minimum, they'll do 640 or higher. They try to go for like kind of the cream of the crop. I know at the Federal Savings Bank, we're at 610 minimum credit score. And some broker shops go down to 580, but then it becomes very complicated. As far as the requirements go, there's a lot of additional overlays to that a lot of veterans just don't understand, right? Because it's a lot of technical mortgage lingo that people are throwing at. But, getting into a credit program, like I know we offer that, so if someone doesn't meet the threshold, we'll put them in a credit repair program to get them back up to where they need to be. A lot of people have some deployments, they miss some payments, you got other things on your mind. Transitioning from Army to civilian life. Now, this is more for your active duty personnel, right? So you came off active duty for 3 or 6 years or 10, 12 years, whatever the case may be. Then, we try to match up the jobs, right? So if you were in logistics before and you're going into a salaried position being in logistics, and again, it's your 2 weeks into the job, guess what? You're going to be able to qualify for your VA loan. But if you're going from, but if you're coming from like supply and you're going into a finance job, that might not work. But if you have a finance degree that you got while you're going to while you were in the Army active duty, you just got your finance degree upon finishing ETSing, then guess what? We can make that work. So again, there's a lot of small factors that go in that really you need to talk with someone that understands it. As far as bankruptcy and foreclosure goes, if you file a Chapter 7, it's going to be 2 years from your discharge date. Chapter 13, that's like your Chapter 7 is you to clean out your debt. Chapter 13 is you are in a restructuring payment plan, and it's 1 year from the time that discharges. Foreclosure, it's 3 years. Now, it's important to note that if you maxed out your VA home loan entitlement and your property went into foreclosure, you will not be able to reinstate those benefits. But if you had like an FHA loan or a conventional loan and you went into foreclosure and now you want to utilize your VA home loan benefits, you can.
I did have one question. And when regards to employment, if you're a service member who is in school full time and you're utilizing your GI Bill, your benefits, can you use that income can you count that income when you want to purchase a home? Is that income looked at, or can it be used in substitute of employment?
It cannot. So any type of education money you get cannot be used for this. So like your basic housing allowance, right? They give you, let's say, $2,000 a month to live in the city. You cannot use that as income towards, hey, you cannot use it, but you can use that money towards, let's say, any kind of closing costs associated with the loan. Now, if you're married, you can be at school and your significant other is working but makes enough to afford a home, then you would both go on the mortgage. Your income you wouldn't have any income, but they would. You'd be first on the loan. Veteran always has to be first. And then you could still qualify to buy a home using their income. And then you use that money towards down payment. Now, two veterans can also go into buy a home together. The only thing that becomes complicated with that is that you have to submit it to the VA first. So it's an additional 14, 15 days that it's factored into processing. Same thing if you want to go with you don't have to be married in order to add someone on to the mortgage, like a non-borrowing partner or spouse can still go on, but you have to put like 12.5% down payment.
I had a little question about that with the spouses. If you have two spouses, if you have a married couple who are both veterans, and they both have VA, GI, both have benefits, VA home loan benefits. Could one just use their benefits and then later on the other one use theirs, or are they both looked at together?
That's a good question. No, you can split. I've done a lot of those too, is where two married veterans are coming in, they'll just use one of their benefits.
Okay.
Because at that point it doesn't make to split up the benefits, because if you max out on one, let's say for some reason a couple years down the road you're like, hey, I want to move, but I want to rent that property out. Go ahead, you can rent it out as long as you live in that residence for 12 months as your primary residence. And again, that's one thing that I'm not sure if it's going to go on the next slide, that you can only use the VA home loan for your primary residence. You cannot buy it for a second home. You cannot buy it as an investment property. Second home is something that you live 6 months or less. 6 months and a day is your primary residence. Okay? So what type of properties can you purchase? So one's going to be a single-family residence, condo, and 2 to 4 unit buildings. So one of the things that we see issues come up with, Karen, you make a good point about when you were buying a home, like your realtor understanding what is the VA going to accept, right? So it's going to be like, hey, no cracked sidewalk or peeling paint. Another one's going to be guardrails in the hall or staircases that are required. Condos are a big one, especially here in the city. The condo needs a separate VA approval. So even if the condo is FHA approved, doesn't make a difference. It has to be VA approved. Now, at the Federal Savings Bank, if you're looking at a condo and you want to make an offer, it's not VA approved, but you get the association to agree to get VA approved, we'll do it at the bank for free at no cost, right? So we can get it done in about 14, 15 days. We know the people up in St. Paul. And if it's somebody that's looking to sell their condo and wants to get VA approved, then it's going to be the Hearthstone Foundation. So I'm on the board of directors for them. We focus on VA home loan education as well as getting condos VA approved for veterans that may own right now that they're looking to sell down the road. 2 to 4 unit buildings, so you can use the rental income to offset your mortgage payment. So which is great because if you're buying, I have a buddy that bought a place for $650,000 out in Wicker Park. His mortgage is only $500 a month because the renters paid most of it. The only gimmick here is that you're going to need some reserves. Typically it's 6 months. Some of them, depending on your approval, might come in 3 months only. But, I mean, you want to have those reserves just in case, you have to find a new tenant stops paying. You want to make sure that you know what that is. In Illinois, all property require termite inspection. Now, it says veteran cannot pay for this. So if you're purchasing a property, the veteran cannot pay for the termite inspection. If you're refinancing your property, well, at that point you already own the property, and if they need a termite inspection, you're going to need to do it. If you live out in the rural areas, you're going to have a well and septic agreement. That's something that your attorney's going to kind of walk you through. The appraisal itself kind of just lets you know, hey, this is what the value of the property is, the fair market price, and it also is going to determine if there's anything that any repairs need to be done to the property before the VA is going to allow you to buy it. Now, let's say right now, like the wintertime, you have a cracked sidewalk. Well, it's 20 degrees outside. You can't repair the sidewalk. So the VA will make exceptions and make you set up like an escrow account or something, basically money held, that once it becomes nice enough to repair, they can come out and do it. Any questions?
I did have a question about the inspection itself. Is that something that the service member or veteran would initiate with the VA on their own, or is that something that the lender does? It works collaboratively with the VA to set up.
So the termite inspection?
For the appraisal.
Okay. So I'll cover that in something else here. So termite inspection, you don't have to worry about. Typically, the seller's agent or the sellers pay for the inspection, and there's nothing you have to get involved with. The appraisal itself, so you're going to pay for that upfront because it's a third-party fee, right? So no matter how you look at it, you're going to have to pay for the appraisal. You cannot pick your appraiser. The lender, these are like one of the only things you're not allowed to pick is an appraiser because these appraisers are selected by the VA. The VA approved. They know the minimum property standards, so they go out and do it for you, and then you get a copy of your appraisal.
Okay. And I had a question about the condo. With the condo, if a person wants to purchase a condo and they're not sure if the VA has approved that condo, how do they find that information?
So you just Google or Bing or Yelp or Yahoo, any of the, just type in VA approved condos, and it'll take you right to the HUD website for VA approved condos. Now, it's confusing because sometimes they give you a range of property addresses, sometimes it's just the association name. So it's important for your realtor to reach out to the association or have your lender reach out to them, make sure, hey, are you VA approved or not? And if you are, just verify it with the association name and address. The VA is pretty quick about updating the website once the condo is VA approved.
And what are some of the things that the VA is looking for, when they're approving condos?
Yes, there's two major things. They'll disqualify a condo. The rest of it is negotiable, okay? So one's going to be the right of first refusal, and the second one's going to be if there's a rental restriction. So the right of first refusal is that the condo association wants to have the right to buy the property outright from the bank, as well as be able to prevent certain people from entering, to being able to buy the property, right? This is from a long time ago when there's discrimination against people coming into the property. The rental restriction is when, let's say, and this was made more for active duty personnel, but it applies to everybody. Because let's say you live in a building, but you're being deployed and you want to rent out your unit. If there's a restriction on you renting out your unit, well, that restricts the veteran, right? So that's why they don't allow it. So some places don't allow it at all, no rentals. Some places say 70% of the units, have to be owner-occupied, only 30% can be rented. So those will automatically disqualify. Either one will disqualify it. Now, that's why, as like the lender, we can look at the decks and bylaws of a condo association and look at it and go, yeah, no, you're good to go. This is pretty much a done deal, and just gather all the documents we need.
Okay.
So how much can I borrow? So again, this is going to be what you can borrow up to with 100% financing. So loan limits are really based on your entitlement, the $36,000, and it also depends what county you live in. Pretty much all of Illinois is at 417. It's not going to be lower. It's only going to be higher. Like in California or San Diego, it's 625. In Hawaii, it's like 725. Right? Just depends on the area and the medium housing. So a single-family condo, you can go to 417,000. Two-unit building, 533,850. Three-unit building, 645,300. Four-unit, 801,950. Now, if you go past those amounts, well, at that point, it's going to require a down payment, right? So jumbo, loans greater than 417, it's unlimited, but there are just some restrictions. And then it's lender restrictions mostly. 25% down payment with the difference of the purchase price and the loan limit, right? So example, if you buy a property for $550, subtract out the 417, is 133 times 0.25 gives you a 33,250 down payment, which is still cheaper. Interest rate's going to be lower than anything else, and it's 36. The link below lets you see, hey, if you're buying a property in Tennessee or Florida, what's my max financing? Now is the funding fee. So again, this fee is rolled. Okay, so this fee is rolled into your mortgage. So if your property's for $100,000, you're in the guard reserve, and it's your first time using your VA home loan benefit. You put no money down. They're going to charge you 2.4%. So it's $2,400. So it's not like you're bringing that additional money in. So you get 100% financing of $100,000, and the lender adds into your mortgage the funding fee. But that's the only fee on a purchase you can roll into your mortgage. Some people think they can roll in their closing costs. You cannot. Those are things that you'll have to pay for yourself or ask the lender to give you a higher interest rate so they can offset some of those closing costs. And one thing a lot of people don't know is that you do get a tax credit. So this credit is not in any of the documents you sign or your sales contract or anything. This is something that you're going to ask your real estate agent about or the attorney that you're working with that's representing you on the purchase of your property. So we just start from the top right. You have a type of veteran, you have regular military, and you have reserve guard. Down payment, so it goes none, 5%, 10%, same thing for reserve, and then here it just says precise for first time use, right? So first time use for active duty with no down payment, 2.15, and guard reserve, 2.4. After you reuse your benefits and you don't put any money down, it's going to be 3.3 for both. Now, theory, if you see your home, you should have some equity in it, which that's why they put, hey, if you put 5% down, we'll save you, almost 1.5% on that. And even though it's rolled into your mortgage, you can either put some equity into the house or just leverage, using 100% financing. Cash out refinance loans. So there's going to be, if you owe $50,000 on your property, the value is $100,000. You want to take out $50,000 out of your property, you're more than welcome to, as long as you qualify for it. You can take out 100% of the financing, and then they're going to charge you, 2.15, and if you're reusing your benefits, 3.3. Reserve National Guard 2.4, first time use, and 3.3 for subsequent use. Now, if you're asking how can you be a first time user of of a VA home loan if you're taking cash out of it, right? It's kind of, well, how can that even be possible? So what ends up happening a lot is that veterans get put in FHA mortgages because at that time maybe their credit wasn't good enough, or they didn't have the down payment to use a conventional loan, and they get basically thrown in an FHA loan. So you can refinance an FHA or conventional loan into a VA loan. It's considered a cash out, even if you don't take cash out, but you're going to have substantial savings. I do this all the time for people. It's always huge savings. Now, if you already have a VA loan, right, you already used your first time, you bought it last year or the year before, and you're going to use your 2.4, they charged you, well, I'm sure if you already have a VA home loan, you've seen mailers in your property or on TV of IRRRLs, which is Interest Rate Reduction Refinance Loan. Here they only charge you 50 basis points, or it's a 0.5%, right? The fee, that funding fee, is typically picked up by your lender. There's a lot of restrictions on interest rate reduction refinance loans. They're really almost free to you. There's no appraisal. It really benefits you because if you're over 4.5% interest rate, you can drop down to 3.5% and save $100. Or if you're an FHA product, switch to a conventional, save $300. So you have a lot of options with that.
I had one question about that.
Mm-hmm.
If a service member or veteran had purchased a home and it was a conventional or a FHA loan, and their home went backwards, so they owe more money than the house is worth, can they still refinance it into a VA home loan?
That's a good question. Now, if they're upside down, they will not be able to.
Okay.
Now, so there's different, when you're upside down in your mortgage, what you hear out there is called a HARP loan. That's for conventional. Okay. FHA has a streamlined refinance. It's the same thing. Hey, you're upside down, you can still refinance. IRRRL is for the VA loan. It's the same thing. It's like, yeah, you're upside down, but we can still refinance you and get you a lower payment. So yeah, if you're in a conventional product, you're upside down, you would just redo your loan with the HARP program.
Okay. That answered my question.
Perfect. So what I get asked a lot is that, great, the information has been really helpful, but kind of what are my next steps, right? What do I do? So this is kind of what we talked a little bit earlier. Get pre-approved by a lender. Go to va.benefits.va.gov to get your certificate of eligibility. Now, your lender can get that for you. It's probably a lot easier and it's not as frustrating if you do it yourself. You just have to provide a couple of pieces of documents, D214, basically a loan application. Get pre-approved. Remember, you're pre-approved for the mortgage payment, not a purchase price. So if you're pre-approved for $300,000, like we have up here, you might not be comfortable with that, right? Because the taxes a lot of times fluctuate so much that this payment could turn to $2,100, $2,200, $2,500 really fast, right? Because some taxes are like $10,000 for $300,000 properties, depending what area you're looking in. So always be aware. Talk with your lender. Hey, this is what I'm comfortable with. They'll work backwards. If you're comfortable with $1,600 and roughly insurance is $100 and taxes are $400 in the area you're looking for, they can work backwards to get you what this number is going to be, right? And then it will be case by case depending on the lender and what kind of technology they have that you can leverage. So make sure that. Find a real estate agent. Now, your lender, again, that's the first person you want to go to because that's going to determine what you can qualify for. Are you ready to buy before you start going down the rabbit hole and talking to an agent, doing this, making offers, again, making sure you're qualified. And one important thing to know, do not buy or do anything without consulting your lender. Once you've been pre-approved, do not buy a car, do not go out and get a credit card for furniture because you're getting ready to buy. Do not do anything without consulting your lender. Do not switch jobs. Do not quit your job. Do not get fired from your job. Don't do anything, especially with assets. Don't be moving money around once you've been pre-approved because that will cause delay in financing, right? So you just have to be aware of that. Now, find the right real estate agent. Again, your lender, especially if they do a lot of VA stuff, like I do a lot of VA stuff. We work with agents that are, they understand like what you're going. They understand your lingo. They understand, hey, this is what requires for a VA to have, what type of property requirements the VA is looking for. So it's not like they're getting you into houses that you don't even they're not available for financing, right? You want to make sure that. So they're going to negotiate the terms for you. They're going to write up the contract for you. They're going to be able to show you the homes and in an area you're looking for. And it really, in the beginning, it's kind of tough because you have an idea of what you want, but it might be out of your price range, right? We've all seen those HGTV TV shows where they're like, oh, you wanted this? Well, it's $1 million. Well, this is what you can't afford. So it's understanding that concept when you're working with them. It does get frustrating and it can be emotional, right? But just same thing with the mortgage process. 1 million documents that you have to get together, and it's important that you just be organized, have everything in a PDF format. A lot of things these days you could download from the internet, like pay stubs, W-2s, tax returns, bank statements. You could get all of that. Making an offer on the home. Once your offer is accepted, let the lender know. You're going to have to get an earnest check together, which is basically a deposit for the property. Typically, it could be from $1,000 to $30,000, just depending on the type of property. Since you're getting 100% financing, it's important to note you want to do the least amount of earnest, because it really doesn't make a difference. You schedule your home inspection. That kind of determines, if there's anything wrong with the property. Typically, if it's not a new construction or a condo, there's going to be something. You just have to be willing to work with it. A lot of times, you can get a home warranty to make sure that nothing goes bad on the property. At that point, you're also going to get an attorney. Now, in Illinois, you're going to have an attorney that represents you. Your lender and your agent both work with attorneys that they work with all the time. But it's important to note that they will probably refer you to someone they work with. Just put their name on the contract, and boom, there you have somebody you're working with. Once you're approved and you've talked with a real estate agent, it's important at that point to really contact the attorney for them to explain what they're going to do for you. They're the ones that, hey, we did the property inspection. Water heater is going to go out in a couple months. Well, we want a $500 or $1,000 credit, right? So they're going to negotiate that for you. Once you do that, you're going to get any additional, once the offer is accepted, you're going to get any additional documents, sign the loan application. Now, some people, like I do loans across the country, right? So no matter if you're buying in Hawaii, Florida, Texas, San Diego, New York, wherever, D.C., I can do a mortgage for you. Now, I may not meet some of the clients because even if clients are local, from a compliance standpoint, a lot of things have changed in the last couple months in the mortgage industry. You want to make sure that a lender can do e-signatures, right? So you can actually electronically sign all your documents. It is critical to have that capability. Even if you meet in person, you still want to be able to have the ability to do e-sign documents. Lender orders the appraisal for you to determine the value. They're the ones who lock your interest rate. In all reality, interest rates, it looks like they're on the up. You can't really go wrong by locking your rate. Right? You know you're buying a house. You know what your payment is. You don't want to gamble on that. Once your loan application is with the processor, they gather all the missing docs. They do verification of employment, review your assets. An underwriter takes a look at it. That's kind of like your last person that's going to take a look at the file, right? After the processor gathers the missing documents, they will just review everything to make sure, like, yes, everything you said is correct. That's what the frustration of getting more and more paperwork comes together, and then it moves to closing. You just get with your lender to determine how much money you're going to bring to closing. And your attorney is going to know actually better than your lender with the recent changes in the law. And again, that's something you want to discuss with your lender. What is the mortgage process with them? Once what is a clear to close, right? They'll be like, hey, we have to wait for you to clear to close in order to schedule a closing. Well, clear to close means that everything has been done by the underwriter, and you're basically ready to go to a closing table. You're ready to buy a home. You're done. And that's a quirk thing that we'll do through verifications of employment. That day of your closing. So just make sure that somebody in HR is there, because if they're not available and they can't verify employment, the loan won't be able to close. And the supervisor could verify the employment for you and everything else the day of the closing.
David, I did have a question. How long does it take to close on a loan once you make an offer?
30 days.
Okay.
25 to 30 days, yeah. I mean, that's with us. I know some of the other banks are 60, 90 days. But yeah, with us we do that. And we also do something different. So for the active duty, reserve, guard, military associated loans, what we do is called the Express Pre-Approval Program. So typically, right, you're going to be, okay, you get pre-approved, you find an agent, you make an offer, it gets accepted, then everything starts, right? But wouldn't it be nice that, hey, based on your pre-approval, you know you qualify and the underwriter's taking a look at it, right? So you can close in 20 days even. So we do that at the Federal Savings Bank, and I believe we're one of the only companies in the country that will actually underwrite a loan for a client before they even find the property. So when they go look at a home, they know they qualify for the home and they can be a smooth transaction.
So is that more like a cash?
It feels like a cash. Okay. Yeah, because it's almost like a cash offer outside of getting an appraisal, termite inspection, and waiting for a title commitment.
Okay. I just have a few questions. One question that I have is, are VA home loans assumable?
They are. So if you are currently with Fargo, you would contact Wells Fargo. Let's say your cousin wants to assume your mortgage. So let's say I have $200,000 left in the mortgage. The house is worth $300,000. They want to come in. They're also a veteran. They want to come in and assume my rate and my balance. Then you would contact the lender. They would do a regular loan application, and they could assume the property. But just remember, if they assume the mortgage, you will lose that $100,000 in equity. It's not yours anymore. You've given that to them, and they can do whatever they want with it.
And if they assume the mortgage, do you get your VA certificate? You get your eligibility
back.
Back.
You get it back. Yeah, because someone else is using their VA benefits at that point.
Okay. Okay. I also had a quick question about, I get a lot of questions about being able to purchase short sales or foreclosures with the VA home loan. Is that something that you can do?
You can, but the reality is that a short sale foreclosure may not be up to standard as far as the property itself goes to have VA financing. Because if all the cabinets are gone, well, or the kitchen's missing or bathrooms are missing, guess what? It's not, you can't buy it.
Okay. So in the inspection process or the assessment or the appraisal process, the VA is looking for a home that's sound, safe, inhabitable.
Yeah, and then they want to make sure that you can move in and live there, not move in and rehab it.
Okay.
Right? The VA doesn't offer rehab loans. You use regular VA to purchase a home. At the Federal Savings Bank, we offer 100% construction loans.
Okay.
But it's, it's very unique to the client. It's very specific to the client. Has to make sense. Like, we have to get a builder that will be that we can approve to do this, to make sure that we can buy the land and build the house on your behalf.
So for a veteran who's maybe disabled,
yes,
utilizing that as a resource, I mean, they could build a home, custom made,
put ramps in, do whatever they want, right? Because that's probably what becomes frustrating for people is when they're buying a home, especially if you're like retiring or older or whatever the case may be, you can't find that home for you. Well, we can do that.
That's good to know. I think that answers all of my questions. I kind of wanted to take this. If I do have one more question, if a service member or a veteran has questions, about if they want to talk to you one-on-one, or if they want to sit down and figure out how to qualify for a loan, or have questions, can they contact you? What's that process?
Yeah, so if you have any questions, or just even like want to do one-on-one, or want me to come out to a unit and do a VA home loan presentation, I'm more than happy to do that. You can send me an email here at Piatek at the Federal Savings Bank, or shoot me a call at my office number. And if you can't reach me there, call me on my cell phone, and then I'd be more than happy to answer any kind of questions you have, if they're specific to you, or even coming into. I do a lot of stuff in the like a veteran leadership council. So every company has like a veteran affinity group, right? So I come and do presentations. I do presentations at units. Really, anybody that's willing to listen, I'm more than happy to go over how it works, and even to do the mortgage itself.
Wonderful. That's great to know. Well, I wanted to take the time to thank you for coming out and going over the VA home loan process with us.
No, I appreciate it. Thank you for everyone that attended and watched the video, and look forward to talking with everybody. Thank you.